Welcome back to the Patrick Lane Show. Thanks for checking in with us where we talk about personal finance, investing, and real estate. Do me a favor right out of the gate. Let's get it out of the way. You all know I'm going to ask. Smash the like button, hit the notification bell, hit the subscribe button so you can see every new video that we put out. It really helps us to grow the channel, and we really appreciate it. Well, today we're going to think about the 9 most terrifying words in the English language, but more about that later at the end. So today, GameStop is the subject of another hearing in Congress. Yes, I know. We had one a few weeks ago, and everybody was all shocked and surprised and excited about it. And the House, that's the House of Representatives, took their shot at discussing and investigating the whole GameStop short squeeze saga that took place in January. Well, if you remember, they had Vlad Tenev from Robinhood, they had the hedge fund guys, they had Roaring Kitty, DFV was there and testified. Well, today in the Senate, they're having a similar hearing, and they're supposed to be addressing the same issues, but interestingly enough, they didn't have the hedge fund guys, they didn't have Vlad Tenev from Robinhood, and they didn't have Roaring Kitty, DFV there to testify. So who did they have? They had a couple of professors, they had someone from the DTCC, and they had someone from a think tank. And as you might imagine, it took a different sort of a feel at the hearing today than it did back in February when the House did their hearing. Today was the Senate hearing, before was the House hearing. Now, the problem with the entire hearing process was that you could tell from the get-go that most of these witnesses, and frankly, most of the senators, weren't as interested in hearing or discussing what the problems were, what the issues were when it came to GameStop, the problems retail investors had when Robinhood had to shut off their trading, so you could only sell and you couldn't buy, which means a lot of people missed out on buying when the price was going up, and they could only sell, which caused the bigger institutions, the people who were holding and wanted to sell, to be able to sell their shares. Well, you know, as we all know, right, Economics 101, if you can sell but you can't buy, then the market doesn't determine the price, and the price just keeps dropping and dropping and dropping. Well, I think what today fleshed out was a lot of these senators on the banking committee in the U.S. Senate have no idea how the markets work. They don't know who they are representing in this situation, because unfortunately what happened was it came through very clear. The answer in the minds of most of the people on the Senate committee and most of the witnesses at the hearing is the answer to retail investors and their ability to engage in retail investing to build their own wealth through their own self-direction is to limit retail investing, stop gamification, and impose a transaction tax on buying and selling stocks. So, do any of those things actually help people become more wealthy? And the answer, of course, is no. And frankly, one of the witnesses said the whole point of a transaction tax is to put sand in the wheels and gum things up so that it doesn't go as fast. So what they're saying is that retail investors like you and me, who are just on our phones, trying to invest, trying to save money, trying to make money, and want to build wealth for our future, first of all, we're too dumb, we're unsophisticated, we don't know what we're doing. So we've got to stop retail investing or limit it severely, and we have to be bombarded with more and more and more knowledge, even to the point where we have to pay for that. They want us to go back to paying brokers and other financial advisors to invest for us rather than continue with the model that Robinhood and other zero commission providers have created, which is that we find our own information, we figure out the stocks that we like, and then we are able to trade for free without paying the commission, without paying the financial advisor. And it was clear in the hearing that they don't want that. They don't want you and me to be able to make our own decisions. They want us to pay someone else to invest for us. That's number one. Number two, we are so dumb and unsophisticated that if the trading app Robinhood or WeBull or eToro or E-Trade or TD Ameritrade or any of them that are zero commission, if it is too much fun, if there is too much pleasure in trading, if we receive general happiness and euphoria from trading our stocks or buying or investing, then we shouldn't be doing it, and it's not fun. And they call that gamification. So when you make a trade on Robinhood and confetti drops, they're saying that that incentivizes you to make more trades even if you don't want to. You're being manipulated by digital confetti, which is, of course, to any rational person, an absolute farce and ridiculous statement. But the people in Congress and today, particularly the United States Senate, think that gamification of investing is so bad that it should be outlawed. Luckily, one senator, before the hearing started, came out and said, there's no problem with gamification. That's Pat Toomey from Pennsylvania. He said, gamification is not an issue. It shouldn't be a mystery or it shouldn't be painful. It's okay if it's fun to invest. So that's one out of that entire committee who said something along those lines. Now, the others focused on taking the fun out of it, implying a tax. And, I got a kick out of one witness said her average investment over her years of investing was $9,000. So every time she made a trade, it was $9,000. And she thinks it's okay to impose a transaction tax of 10 basis points, which is 1/10 of 1%, on every financial transaction in order to keep people from trading so much. But what she doesn't understand is, on her $9,000 trade, yeah, that's only $9. But when you're in the retail investor sphere like you and I are, and we're just buying one share or we're even buying fractional shares of something, how does that work? If I'm going to buy one share, that is a big impediment to buying that one share. It makes it difficult. That $9 or that percentage is going to make it difficult. And that was one person. Then there was another professor on the panel who said that we ought to be paying that for that financial advice no matter what. So if you buy one share, she wants you to go pay a financial advisor to tell you whether it's a good idea or not to buy that one share. And frankly, some of these ideas just get more and more ridiculous. And the fact of the matter is that the very people who are saying they're trying to protect retail investors like us are the ones who are trying to shut down the retail investor opportunity. If they impose their transaction tax and if they do away or outlaw gamification of investing, then what's going to happen? Robinhood's going to go away. WeBull is going to go away. Zero commission is going to go away. They want to force us to pay somebody $10 to buy one share of stock, regardless of what the stock price is. So if you want to buy one share of AMC that's trading at $6 or $7 or $8, then they want you to pay $10 to someone in order to execute that trade. It doesn't make sense. So what's going to happen is we're not going to trade. We're not going to invest at all. But at the same time that they don't understand the consequences, if you look at Robinhood's statistics, we can see that Robinhood has about 13 million users now. That's just Robinhood. That's not Robinhood plus WeBull plus eToro plus all the others. That's just Robinhood. And why Robinhood? Because it's a zero commission. It's zero problems. It's zero hassle. You load the app on your phone, you deposit a couple of bucks into your account, and off you go, ready to trade. Now, of course, it's up to you to make the right decisions, to get the education, to find out all of the knowledge about the stocks you want to invest in. But you're not paying for that because you don't want to. You want to invest in yourself, in gaining the knowledge, and put that money to work, that knowledge to work on a platform that's going to allow you to do that. So if you look at those 13 million people who are predominantly under the age of 35, their average account is valued at $3,500 on Robinhood. Whereas if you look at some of the other trading platforms that these people in the Senate say that they're watching out for you and they want you to be involved with, if you look at those average balances, they're much, much higher. So what's that tell you? One of these ways to trade, the zero commission retail investor model, is targeted to the people at the lower end of the scale. It's democratized. Anybody can get in for $0. At the other end of the scale, those accounts are $50,000, $100,000, $150,000 balances. Well, what does that tell you? It tells you that those people started off with money that they could invest. So the whole idea that gamification and $0 trades is a bad thing for the majority of the population is just a farce. So back to where we started. The 9 most terrifying words in the English language. And if you don't know that quote, it comes from a politician a few years ago. When I was a kid, he was the president, and he said that.
I think you all know that I've always felt the 9 most terrifying words in the English language are, I'm from the government and I'm here to help.
Now, I don't mean to be political. That's not what this is about. This is an investing, personal finance, and real estate channel. So I don't care about politics. But when someone says you can't invest because you're not smart enough, you can't do it on your own, you think investing is fun, and therefore we're going to take away your ability to invest for free, we're going to charge you a tax for investing, and we're going to make sure that you don't have any fun investing. That to me says that the person imposing those restrictions does not have our best interest as retail investors in heart. So tell me what you think. Leave a comment down below. Let me know. Should we impose the tax? Should we restrict gamification? Should we end zero commission trading? Or should we leave things the way they are and just provide more transparency so that we all have the same information and the same understanding? Let me know down below, and we appreciate you watching the video today. Do me a favor, smash the like button, hit the subscribe button, ring the notification bell. We really appreciate your support, and we'll see you on the next video.